Let's get a check now of what's happening in the world of business. Our business editor, Kate Moody's here. Hi there, Kate.
Hi, Tom.
Now, yesterday we had one warning. Today we've got another warning that the Russian invasion of Ukraine is derailing the global economy's recovery from the pandemic. Tell us more.
Yeah, the same message coming from international organizations around the world. The Organization for Economic Cooperation and Development is the latest to slash its forecast for 2022 from 4.5%, which was projected back in December, to just 3% in its latest economic outlook report. That is largely in line with similar forecasts by the World Bank and International Monetary Fund, which have themselves drastically scaled back their pre-war projections to 2.9 and 3.6% expansion, respectively. Driving that slowdown is the cost of living crisis that's impacting households and businesses around the world. Catherine Viette has more.
Haggling over the price of a rickshaw ride. For domestic aid, answer May, every penny counts. A round-trip rickshaw ride to her brother's house used to cost her 400 rupees, or about $2. Now it's 600 rupees. In Pakistan, crippling inflation has driven up the prices of almost everything. And it's not the only country that's being battered by rising costs. The Organization for Economic Cooperation and Development is warning the world economy will pay a hefty price for Russia's invasion of Ukraine.
As a result of Russia's war, global growth will be lower and inflation will be higher for longer. We now project global growth in 2022 at 3%, a downward revision of 1.5 percentage points with respect to our December's projections, with a further slowing in 2023 to 2.8%.
The Paris-based organization is the latest institution to sound the alarm over lower GDP growth and soaring food and energy prices. Both Russia and Ukraine are major commodity producers, responsible for 30% of global exports of wheat, 15% for corn, 20% for mineral fertilizers and natural gas, and 11% for oil. With the war disrupting exports, prices for goods are increasing. The OECD is projecting inflation for its member countries to hit almost 9%, nearly double its earlier prediction, before gradually dropping back to 6% in 2023. As high inflation cuts into households' incomes, the OECD warned the poorest will be hurt the most by the rising prices.
Let's check in on the day's trading action now. The major European indices closed lower. The FTSE 100 just in the red in London. Losses of around 0.75 percentage point in each Paris and Frankfurt. Shares of the Danish shipping giant Møller-Maersk were down around 8%. The low-cost carrier Wizz Air down 9.5% today. A slightly more muted picture on Wall Street, although stocks have accelerated their downwards trend there. The Dow Jones down about 0.9%. The S&P 500 nearly 1%. The U.S. is set to publish its May inflation numbers this Friday. That'll be key in the Federal Reserve's next policy steps. The U.S. Central Bank could raise interest rates again next week. Well, meanwhile, investors will be keeping a close eye on Thursday's meeting of the European Central Bank. Policymakers are under pressure to rein in record high inflation, which hit 8.1% in May across the 19-member Eurozone. ECB Chief Christine Lagarde has indicated she will begin raising interest rates, but not until July. She could, however, give some indications of just how aggressively the bank will move on normalizing interest rates and ending its emergency bond buying program. India's central bank has raised its key interest rate by 0.5 percentage point from 4.4 to 4.9%. It's the second such hike in just 3 weeks to contain inflation that's expected to hit 6.7% this year. Raising interest rates typically helps to fight high inflation by encouraging consumers to save rather than spend. And the central bank's governor said the war in Ukraine was giving rise to new challenges in economies around the world.
The war has led to globalization of inflation. Not surprisingly, central banks are reorienting and recalibrating their monetary policies. Emerging market economies are facing bigger challenges from the increased market turbulence, monetary policy shifts in advanced economies, and their spillovers. The process of economic recovery in the EMEs is also getting affected.
Well, Turkey's President Recep Tayyip Erdogan is well known for bucking that economic wisdom. He has repeatedly ordered Turkey's central bank to cut interest rates despite spiraling price rises there. He doubled down on that policy this week, insisting that his government would not raise interest rates. The Turkish lira, which has lost about 22% of its value against the dollar this year, slid still further on Wednesday, falling to 17 lira to the dollar. Turkey has among the highest rates of inflation in the world. The OECD projection for this year, Tom, is 72%.
17 lira to the dollar. It was about 3 some 10 years ago when I last was able. Thank you very much indeed for that. Kate Moody,